Good afternoon, everybody. Welcome, welcome. So let's share the link, give us a thumbs up, and let's get this to reach like a lot of people, and then we can get started just immediately while we wait for others to join. Alright, so today we'll be doing forward testing just together, just more like trading life together with everybody. We're looking at a top-down analysis of gold, what gold is going to do, and what I expect and anticipate for gold to do exactly. So we'll have more like a very, very long session, but we'll try to make it brief. So firstly, it's always very important that we start from the higher time frame to analyze. You don't want to be looking at the lower time frames because the lower time frames are always very, 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 very confusing, especially for beginners, traders, and you don't want to be in that position whereby you rush in to enter a buy or a sell, even if price action is just the same thing in all time frame. So whatever price is doing in the lower time frame is just the same thing it's going to be doing in the higher time frame. But it takes a lot of mastery and skills to understand that this is very relative, right? So you have to have a lot of experience to be able to gain that level of mastery to be in the 1 minute time frame to trade. Can you be profitable trading the 1 minute time frame? Yes, of course. You can be. So in this live stream today, I'll also be sharing some trade setup. I'll also be sharing some trade setups, and we are literally going to be analyzing gold just together as we would forward test more than back testing. So I'll explain what forward testing is, and I'll also explain what back testing is. All right, so let's start from the higher time frame to analyze so that you know what I'm looking at for gold. So welcome everybody. Welcome. You're just joining. Give us a thumbs up. So if you're just joining, give us a thumbs up so that this can get to reach a lot of people. So we start from the daily time frame since we want to take our trade intraday. So what we want to do is we start from the daily time frame to analyze, then we go to the 4 hours time frame, then we go to the 1 hour time frame, we go to the highly likely 30-minute time frame, 15-minute time frame. For execution intraday, we'll be focusing on 15-minute time frames. But for the forward testing, we'll look at the 1 minute time frame because I want to read every candlestick as it is going forward for you. Like as it goes forward, we read every candlestick just as it is. So in this time frame, we have this bearish fair value gap here at this point, which I already did like analysis in the Telegram channel Headway Nigeria. And also, if you're not in the Telegram channel Headway Nigeria, just ensure that you are there too. So I did this analysis and Headway Nigeria posted it in a short video explaining why I want to see a little bit of rejection at this point. We have this bearish fair value gap here that is holding price as resistance. So we want to see this bearish fair value gap here from which I marked and extended to the right. We want to see it hold a strong resistance for price to continue to trade lower. So before it does that, it needs to give us very strong willingness that is going to go to the downside. That's to say that we need to see that the sellers are taking over the market. We need to see strong sellers momentum for us to trust that it is going to be a sellers market. Now, before this, we had price extended higher. We also explained that we wanted to see how price will come for the swing high here at this point. Now, why we are analyzing this gold is that you can trade this gold over the weekend. Just search XAUT, and let me write it here so that you see XAUT. So, oh, sorry about that. So let me write it here, XAUT. So that's gold token. So you can go to your Headway account, search gold token, and you find this to trade with. So while we're analyzing this, as today being Friday, so that going over the weekend, you can know what to do. You can have a perspective of what the market overall is going to do. So you don't just trade in a lost market. So we're looking at gold token, and before this, we already explained that gold traded to this buy side here at this point. All right, gold traded to this buy side here at this point where gold expanded higher, and we saw the expansion clearly reach this point, and we also made clear indication that gold was also going to reach for this previous high here, where we also have this bearish value gap just in sync together. And remember what we've been saying in all our streams, that whenever price trades to a swing high, a old swing high, previous swing high, however you want to put it, a previous swing high, that there is always a strong potential for reversal. And in this case, we don't just have a swing high only, we also have a point where it has like a bearish fair value gap that always act as resistance for price. So if we have price expand higher and stays at this level of resistance, we would want to see rejection at this point. So if you try to be a buyer at this area here, it will be very, very strong resistance and price will be moving just to and fro. You won't be able to just come out profitably in this market because it won't give you good range to trade in. So having this in the higher time frame, having that we have this buy side that has been taken, which is the swing high, and we have this bearish fair value gap here. And we know that price is going to hold a strong resistance at this point. Price holding a strong resistance at this point, we can look forward to price expanding lower. Now, this is what we have in the daily time frame. All right, take note of that. This is analysis for the daily time frame. Below here, some people would just want to be marking like bullish fair value gap or something just around here. They want to back like bullish fair value gap just around here. There's nothing wrong with that. You can absolutely do that just to have a little bit reference for where price is going to go to. So you can mark this bullish fair value gap, then you hold on for price to see, you hold on to see if price is going to trade to this bullish fair value gap right here. You don't just rush in to say, okay, since it has taken a high. This is a very common mistake people do, traders do especially, to say since it has taken a high at this point, this in the daily time frame, that what you expect is that this is a breaking market structure, that you expect that price come down, that once price comes down here, it starts to trade higher from here. So a lot of them will start setting buy stop, and some of them will say the buy stop without even considering the spread. They said buy stop at that point. So a lot of them will start setting like buy stops just like this at this point, hoping for price to come here, then they'll target a swing high, then their stop loss will just be below here. It's not totally wrong to do that, but as traders, we don't hope, we anticipate, we look for reactions, we look for rejections, we look for to see. We don't just I don't know how to put it so that you get it. We don't just say, okay, because this is this, that it should come here. You don't own the market. This can highly likely come back, trade just against you in this point. You need to be sure that price is going to come here. So being sure is you waiting for price to actually trade to this point, and you wait for that reaction. Then immediately you have that reaction, you can jump in to be a buyer. In the cases of most cases, those reaction can come in a bullish fair value gap. Oh, sorry about that. In most cases, the reaction can come in a bullish engulfing candlestick, right? If it is in case of a fair value gap, a bullish fair value gap, can come in a bullish engulfing candlestick, or you have a pin bar hammer which is facing the upside, right? You want to see key rejections at this zone, which indicates a lot of bullishness. And if this is happening in the higher time frame, like the daily time frame, you can anticipate good trades in the lower time frame. So this is what we're looking at in the daily time frame. Now we also, for those of you that know about CRT, we also looked at how price traded to this high here. This is a candle. This is the full body of the candle. This is a candle range. Let me mark it out. Let me mark it out at this point. So this is a full candle range. You see how immediately price traded to this candle range here, then it rejected off lower. All right, so immediately it started trading lower after taking this range. This would have been an opportunity for a trade, as most people would have taken that. This would have been an opportunity for a trade. Most people would have taken this. So you can see 4 hours time frame, and you can find like trade opportunities just around there. So before we go to the 4 hours time frame, let's just wait for this to sync. Just waiting for some. So if you just join in, give us a thumbs up, and we're going to do more analysis like this every time we do more analysis like this just in the YouTube channel. Ensure that you give us a thumbs up and you also subscribe to the YouTube channel. So we have, as price has taken this buy side here, this gives us more like a CLT range for those of you that are focused and really key on CRTs. So we can go to the 4 hours time frame from here now. So you remember that we are taking this from the higher time frame down to the lower time frame. Taking this from the higher time frame to the lower time frame. So we've had just this here. You see, this here was just one candlestick. Remember this range we marked from this high and this low here. This was just one range here. You see, immediately after it touched this range, this acts as resistance for price. It starts dropping lower. These things you can obviously see. You don't need to force the setup or trade. Like there are a lot of people that they just mark things and they force it. Allow it to come to you, allow it to show you willingness that it is going to actually trade in that direction. You need to allow it to show you like lots of willingness that it is going to trade in a specific direction. So immediately after price traded to this point here, broke down, and you can obviously see the behavior. Even if you want to read the candlestick one candle after the other, you would see how it respects PDRA once you're not forcing. You don't need to force it to come. All right, so just here in the same range where we had this daily candlestick. Remember this point here. Let me just write it out so that you can see daily candle. That's the daily candle range. So we have here daily candle like this the high and this was the low here. So we have this to be the range low. So remember, let's go to the one daily time frame so you see the candlestick clearly. Now see, so this is our candlestick. We have the range high, which is the daily candlestick range high, and we have the range low at this point. So you can, let me take this out so it can be a little bit clearer to you. But remember that this is the buy side here. I think I should just change the color so that it won't be mixed up. So we have the buy side here. Buy side. Remember what I said at every buy side. At every buy side, we anticipate for price to change, like to reverse, like change direction. That's what we anticipate. If price reaches a buy side, we expect that after it takes the buy side, that it should either pull back, we should have like a pullback in continuation, or a reversal. Either can happen at a buy side. We will look at more example from that. Okay, so back to the 4 hours time frame. All right, so this is the candle range. Immediately after it traded right to this point, you see how it looks like a pin. Last week I said something about that whenever price takes a buy side like this, like the body of the candlestick always remains below it. That gives you a strong indication. This is another sign, this is another confidence that price is willing to break to the downside. This is how I can strongly say, okay, if I want to trade this reversal at this point after a buy has happened, after a bull run or a bullish movement happened, I would look at all these signatures at this point. Where is the body of the candlestick at? You see that just at this range, the body of the candlestick is below the candle range where we mark. And you see that once you come to the lower time frame, that candle looks like a swing high, which is obviously a swing high. So remember what we said at swing highs, that at swing highs, which is buy side liquidity, remember swing highs are buy side liquidity and swing lows sell side liquidity for those of you that just coming. So whenever we have price trade to a swing high, there is always a potential reversal. So since we have the candle range in the 4 hours time frame, it's become a swing high. This becomes a buy side liquidity, and price has taken that buy side liquidity. So highly likely you're always going to find a reversal from there to take a trade. So you see this here is gonna be like the other block. So it's easier for you to find like PDRA for you to take entry. So immediately after it dropped lower. You found willingness that price is willing to trade lower a little bit, maybe for some while, because you don't know how far it's going to drop and you don't know how far the market is going to go up. Like the rise and fall of the market is not controlled by you. Only institutions can know that, and government. So you see how it's easier when you can see that there is a lot of willingness for price to go one directional, and you can easily find your PDRA. So you see that since you're anticipating a reversal from here at this point, since you're anticipating a reversal from here, that you can have price drop and expect other blocks to form clearly. You can have price drop and expect other blocks to form. So see this other block here, this a bearish order block. You see a bearish order block is where we have price trade bullish or a bullish candlestick before a a bearish candlestick that has a bearish movement. Right, so this becomes an order block, a bearish order block for you. So a bearish order block is a bullish candlestick. Right, the last bullish candlestick before the bearish candlestick becomes a bearish order block. So this order block is even stronger because we have that this buy side here has been taken. That is when we have the order block even stronger. The order block is even stronger because, right, I hope you just understand that. This other block is even stronger. I'll repeat, this other block is even stronger because we have price pierce through this buy side at this point before dropping. If it happens like this, it's even stronger because we know that since it has taken a buy side, we're anticipating a reversal. So having the other block just after piercing the buy side gives us a strong indication that the reversal is going to happen. And you see at this point, this looks like a bearish engulfing candlestick. So trading is more like art and science. You need to put in a little bit of observation to see what always happens in the market, as price is always very, very prehistoric. So that's to say that what happens today is highly likely that the same playbook is going to have itself again another day. So looking at this 4 hours time frame, we can obviously see how it is rejecting of this. Now we can also have this point here where we have this last candlestick, this last bullish candlestick before the bearish candlesticks. Yeah, so we can also call this an order block. So we have this to be a bearish order block. Yeah. So bearish order block here. Let's mark it out. Bearish will be to the right. Enter here. So this becomes a bearish order block, just as you see here. So what a reasonable trader would wait for, knowing all this, is allowing price to come back to this point to give them just a reversal. But then remember that we have a bearish favorable gap from the daily time frame, which will act as resistance for price. Let's look at the daily favorable gap here. Remember this. Remember this bearish favorable gap here at this point. So have this really noted down. This bearish favorable gap, strong resistance for price to continue to trade lower. So having this bearish favorable gap at this point for us, we know that price is still rejecting to the downside. We look for opportunities. So it can also be that price can just come to this point where we have the bearish favorable gap. We have the bearish favorable gap here. Remember, this is the daily bearish favorable gap, and try to trade lower. This can also happen. This can very much happen. It can just trade like this without reaching the other block, right? It just needs to give you indication that it is rejecting of this instead of this. So once you have that, you're having bearish indication rejecting of the daily bearish favorable gap than the 4 hours bearish order block. So you can go for the 4 hours or the daily bearish favorable gap rejection, then you find a trade from there. And we have a lot of opportunity targeting this. Firstly, you look for the closest possible target look for the closest possible targets, targeting firstly this bullish fair value gap here, and this already, this sell side here has already been taken. This sell side here is already taken. We've already taken this sell side, so I'm not really interested in this particular zone sell side anymore. I'm not interested in this anymore. I just want to have rejection, and we can have a trade down to this point. So at this point, if we have rejections that are showing indication that price is going to come to this 4 hours bullish fair value gap, then I can set a trade intraday to target for this. Let me annotate this 4 hours AVG and set a trade to target for this range here. All right, just hope you guys are following. If you're following, you can drop like a W's, W's, W's. All right, so if you're just joining, give us a thumbs up. Right, so this is what we're looking for in the 4 hours time frame. We have to have our charts annotated just like this, so that as we go to the lower time frame, we don't have mix-ups. We also have this sell side liquidity here after the 4 hours the bullish fair value gap has been reached for. So if it breaks through, if price breaks through this 4 hours bullish fair value gap, we should be able to pull back, then come back to this swing low here. So this should be our last target for an intraday or short-term pullback. So we have, let's go to the 1 hour time frame to see what we have here. So in the 1 hour time frame, we've been having serious displacements at the downside, where you see swing lows has been broken and another swing low here broken, but this is more like a sweep in liquidity at this point. Why I identify this as a sweep in liquidity is because we have the candlestick body still remain just above this low where we mark the sweep, the liquidity sweep just here. See, the candlestick body still remain just above that. So on having this, we still have the candle still pull up, trying to expand just higher. Back to, we have this bearish order block. Remember, we marked from the 4 hours time frame that price can highly likely come here and give us a reaction to try to trade lower. So highly likely you see that the range gets more bigger when you come to the lower time frame. You see, in the 4 hours time frame, the range was a little bit small. But once you're doing the analysis from the higher time frame down to the lower time frame, you see that you have more range and opportunities to execute on your positions. So you see, this is what the higher time frame is doing. You see how this clearly looks like a swing high now, and it has taken this buy side here, right? So we still have this that looks like a pin. Remember, I said how the body still remains below that candle, um, the swing high, the candle range, the daily candle range. All right, for those of you that understand CRT candle range theory, one of these days we are going to try to look at the subject of CRT candle range theory. So the body of the candlestick remains below the candle range high, which it took, and from there we had price broke down and also another breakdown, pullback, breakdown, and all of that. So we're having 30 minutes time frame. We've already done like the heavy work. The heavy work is always in the higher time frame. Once you do your analysis from the higher time frame, you already have a perspective of where price is going to go, overall bias of where price is going to go to. One of these days we're going to have, I think next week we're going to have how to find a bias, a trading bias. So from here is very, very much easier to focus on one direction, being in sync with what the higher time frame is doing. So we've been able to analyze from the higher time frame down to the 30-minute time frame, and you can obviously see where the market is trending to. So can you say that the market is buying at this point? No, you want to look at sellers at this point. You want to be a seller in this type of market. And you have the swing high here, right, where you would want to see price actually trade to. Then we have this 4 hours bearish order block. If price is going to take out this high, immediately after taking out this high, we should anticipate a reversal at this bearish order block here. All right, so let me take this out. Take this out. Also 15-minute time frame. Let's go to the 15-minute time frame. So almost the same thing here. Almost the same thing here. We just want to see more willingness that price is going to trade to the downside. For now, intraday, the 15-minute time frame, I want to see price trade to this point, then break down to continue to trade lower. That's what I want to see. Then pull back, then continuous lower for price. So you see, we have still have a lot of range. You can still go back to this bearish order block, something I'm still looking out for too. So this bearish order block, after trading here, pull back here, maybe trade to this bearish order block, give rejection, break this low, creates like a swing low, break the swing low and shows more willingness to trade to the downside, pull back, then continuous trade lower, more like this, something like this, if it's going to trade. But either ways, we have to, it is very important that we wait to see where price is going to give us willingness to trade to. All right, even throughout the weekends, if for those of you that are new here, you can trade gold in during the weekends with headway. Just search XAUT, that is gold token, and be executing throughout. The trade setup might just form during the weekend, it might form during the end of the trading week today. So the end of the trading week today being Friday is not the end of a trading week for you, because you still continue trading over the weekend on XAUSD. So coming to the 5 minute time frame, let me take this join out. Coming to the 5 minutes time frame, we have how the candlesticks are still trading higher. You see how it's trading higher. So intraday, for now, you would not want to be, it's not, you don't want to be a seller in this kind of market, especially for a buyer. I mean, you don't want to be a buyer in this kind of market, especially for, don't I mean, you don't want to be a seller immediately in this kind of market, especially for gold that is very, very volatile. So if you try to be selling now, it will still be pushing higher for you. So you don't want to, it's very, very risky to do that. You don't want to take that risk. So you have to wait for it to show you a lot of willingness that is going to take go to the downside before you start to execute your position on. All right. So 1 minute time frame. Now 1 minute time frame, I can easily tell you where price is going to go to. So I want to see price go to here. I want to see price go to this point. For 364, that's where I want to see price go to. It's easier to know because you know that the intraday trend is very, 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 very bullish, and there is no willingness currently for price to trade to the downside. So I can easily say that price is going to go to 4364. So the topic for today was for testing. You see how it's going to reach for that, and it's something very, very beautiful to see every time. Very beautiful to see every time. So I want to see price reach for this just immediately, and afterwards we can attend to questions. Yeah, so you should see like a very quick expansion to 4364, very sharp move. You should do that just immediately, and you see how the pattern has been. The pattern has been this. See the pullback back to the bullish fair value gap, right? This should just be an exercise drill for every one of you that's using bullish fair value gaps. You should just be able to come to your chart and mark these stuffs out. Just mark them out and look at how they're reacting from this point. So you see how every time it comes to a bullish fair value gap, it bounces off that. Here too, every time it comes to a bullish fair value gap, it bounces off that to continue higher. Also this, yeah, currently we have this bullish fair value gap in the 1 minute time frame, and you see how the candlestick is pulling back, and immediately after this we want to see it expand higher. So yeah, so the bullish fair value gap here, price has pulled back to this bullish fair value gap. There should be like a whole lot of precision from this point. Immediately after this we want to see it expand higher from here. So while we're waiting to watch price, you have any question, we're attending to them just immediately. Okay, so let me read the charts for just everybody. Say hi, coach. Hi, just John Silvanus. You came in late. Nothing to miss. You can always go back to the video. It's recorded. You can watch every time. So Wisdom Emmanuel said, "Thank you, bro. I just made profit from the signal you dropped. You're welcome. You're welcome. That's the advantage of always following us every time. Now on Telegram, you're welcome. Then also, uh, John Silvanus saying not catching up with this particular strategic approach. Now we've done a whole long series about trading with fair value gaps. Now you need to understand basic stuffs about fair value gaps, order block, which we've discussed here, and we'll also do how to find the buyers. So if you're still having issues with this, let me know what exactly specifically. You can write it in the Telegram channel, right? I'll read them and try to make videos to break down what your questions are, right? So let me know exactly what you don't understand, clearly, specifically what you don't understand, because I've broken this down. This specifically is not a strategy yet, but just something you can start up with reading the market. I'm trying to show you just how to analyze from the higher. I've done analyzing from the higher time frame, finding a bias, and we currently at testing the strategy in the market, right? We're trying to see where price is going to go to. That is the breeding without any execution. If you go back to the start of the video, I said that I want to see price reach for 4364.00, which we are currently approaching that. That is what I said, remember. So if you don't remember, you can always go back to the video to see that already price is already making efforts to push to that point. So yeah, you can see now the reaction of this bullish fair value gap. So Hope Light asking, where do you trade from? Like, I trade from my MT5 if I want to trade. Is that what you mean? I trade from my MT5, Hope Light. So another question from Hope Light, if you have an order block right below FVG or above, where do you choose to trade from? Okay, that is why we have like top-down analysis, analyzing from the higher time frame to the lower time frame. We can have order block just everywhere. For example, we can have a bullish order block here, a down candlestick before the up candlestick. If we mark out this bullish order block now to the right, if you come backwards here to price action, you can still find a bearish order block at this point, right? You can still find a bearish order block. You mark it right, you mark it here. Let me even show you one so that you see. So here is a bearish order block right here. So coming here to pick a bearish order block is just very random. I cannot just pick and say, okay, because it's a bearish fair value gap, I want to trade the bearish fair value gap from here. So I extend it. So whenever price comes to this point, price will react of it and start to trade lower. It can happen. It is possible. It is possible that that happens very much. But then you're not in narrative. You have to be in narrative. You have to be in sync with what price is doing from the higher time frame. You have to know why price is doing what it is doing, which we've done in this particular video. We've tried to analyze and break down why price should behave the way it is, and from that we can know the direction, which other blocks to pick, which fair value gaps to pick. I don't know if you understand this. I don't know if you understand this. So So boy alone. Right? So hope light, I just hope you understand. And John Silvanus, you still have a question, said you're not catching up. Johnston, unless you have a question, you can still drop, catching up. Right? So you can see how price is reacting of this bullish fair value gap. We've been able to trade like tape read live together. We've been able to tape read live together as you can see how price is reacting of this bullish fair value gap. And you've been able to see how fair value gaps work generally for yourself. So we're still going to have this position marked out. And once it gets to 4364, post it on a Telegram channel, and we all drop a W's. We're going to all drop a W's in the chat. So give us the thumbs up, thumbs up, thumbs up. Okay. So Hope Light said you still don't understand. Now let me break it down just one more time, one very very last time, so that you understand. So you're asking if you have an order block right below an FVG, right? Which one should you pick? Now, or above the FVG, which one should you choose? I said that it all boils down to narrative. You need to have a narrative to know where the other blocks and the right order blocks and the right fair value gaps to pick. You see that we did not just pick this randomly. For example, we have that intraday price is currently pushing higher and showing no willingness to trade to the downside. So since it is not showing any willingness to trade to the downside, we want to see it reach for a swing high, which the swing high rest at 443. I think here just around here where I marked here. This was from the higher time frame. So 4364. That's where I marked. So having this to be our targets right now, I'll start using every fair value gap that would support price to reach our target. Once I build up a narrative, once I build up a narrative, for example, my narrative is bullish, I'll start using every PD array. PD array means premium discount array. A premium discount array can either be a bullish fair value gap or a bullish order block. So I'll start using every PD array in my favor. I'll start using bullish fair value gap to reach my target. So the bullish fair value gap order block, they are just tools in your arsenal to use to get to where you want to get to precisely. I don't know if you understand now, Hope. So you have to wait for price to pull back somewhere if your target, if you've done your analysis from the higher time frame and you see that it is bullish, you have to wait for price to pull back to a bullish fair value gap, right? You have to wait for price to pull back to a bullish fair value gap or a bullish order block, then start to expand to the direction which you're targeting price to expand to. So it can be that your bullish fair value gap would be below your order block, just like in this case here. It can be this, you see the bullish for the order block just below here. And we also have this here, you see this other block, this is an other block here. Then you see the bullish fair value gap also below the bullish order block. So these are just tools. I can still wait for price to come to this bullish order block before expanding higher. So either one will still work very much perfectly. So other blocks, fair value gaps, they're just tools to get to your target where you want to get your targets to when you find your entry. I don't know if you understand, Hope. All right, you said you understand. Perfect, perfect. But if you still don't understand, I still have classes, so you can. The more you join the live session while I try to explain, you're going to understand better. You're going to understand just everything better, and you'll be able to forge out a strategy just for yourself to trade with. Yeah, you'll be able to forge out a strategy just for yourself to trade with, and yeah. So someone is also asking which time frame is best for taking the fair value gap. Now, there are time frames, multiple time frames to do this. The time frame best for taking the fair value gap, as a matter of fact, there's no best time frame to take fair value gaps. All right, it depends on what you are looking at. For example, if you're looking at having a bias, if you want to find a bias, it is very important that you pick your favor legal for bias from the higher time frame. You cannot come and pick a favor legal for bias in the lower time frame. Now, if you're looking for a favor legal for entry, you have to come to the time frame for execution, which is your lower time frame, to find your entry favor legal. So it depends on what you want to do. If you're looking for a bias, or what you're looking for depends on what you're looking for. If you're looking for a bias, you use the higher time frame favor legal. Then if you're looking for entry, go to your entry time frame, might be the 15-minute time frame, 5-minute time frame, might be the 1-minute time frame. Then find your entry favor legal from there. So if you're just joining, give us a thumbs up, give us a thumbs up. Right, you're welcome. So to this is almost like the end of the trading week, and we've had like amazing trading time together. And it does not just stop at trading this week alone. We have gold to trade just over the weekend. I remember XAUT, that should be the tag for the weekend. XAUT, trade gold just over the weekend. XAUT is gold token which you can trade over the weekend, throughout the weekend, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, and Sunday, up to Monday again. There's no rest for making money. You have to just make money either ways. All right, so thanks for joining, and for those of you that are just joining for the first time, give us a thumbs up and subscribe to the YouTube channel. Then also try as much as possible to follow up with what we're doing in the Telegram channel too. So till the next session, which we're going to have on about bias, which will be posted and updated in the Telegram channel and just everywhere, all our socials. Till the next time, see you and have a amazing week.